Welcome to Agape Academy. In this video, we'll review EA-style practice questions to help you prepare for the Enrolled Agent exam. Pause the screen, test yourself, and check the answer that follows. Let's get started. Which taxpayer qualifies to file as head of household? A. Single with no dependents. B. Married filing jointly. C. Divorced parent who paid more than half the cost of maintaining a home for their child. D. Married filing separately. Correct answer. C. Divorced parent who paid more than half the cost of maintaining a home for their child. Head of household requires paying more than 50% of household costs and having a qualifying dependent. Which of the following is not a requirement for a qualifying child? A. Must be under age 19 or 24 if a student. B. Must provide more than half of their own support. C. Must live with the taxpayer for more than half the year. D. Must be a U.S. citizen, resident, or national. Correct answer. B. A qualifying child cannot have provided more than half of their own support. Which of the following is considered taxable income? A. Child support received. B. Gifts from relatives. C. Alimony received under a 2017 divorce decree. D. Life insurance proceeds due to death. Correct answer. C. Alimony received from pre-2019 divorce agreements is taxable. Child support, gifts, and life insurance proceeds are not. A taxpayer, age 66 and single, is not blind. What is their 2024 standard deduction? A. $13,850. B. $15,700. C. $27,700. D. $29,200. Correct answer. B. $15,700. $13,850 base plus $1,850 additional for being age 65 or older. A taxpayer, age 45, contributes $7,500 to a traditional IRA. How much is deductible? A. Full $7,500 regardless of income. B. None. C. Up to $7,000 limit. D. Full $7,500 plus catch-up. Correct answer. C. $7,000 is the maximum deductible amount for taxpayers under 50 in 2025. Which of the following taxpayers is eligible for the Earned Income Credit, EIC? A. Married filing separately. B. Non-resident alien. C. Single taxpayer age 30 with no qualifying children and $11,000 earned income. D. Taxpayer with investment income of $12,000. Correct answer. C. Single age 30 with earned income and within income limits may claim the EIC. The American Opportunity Credit allows a maximum of how much per eligible student? A. $1,000. B. $2,000. C. $2,500. D. $4,000. Correct answer. C. $2,500. Up to 100% of first $2,000 plus 25% of next $2,000 of qualified expenses. A. A stock held for 6 months. B. A home sold after 8 months. C. Artwork held for 14 months. Answer. C. Artwork held for 14 months. Property held over 1 year qualifies as long-term. Which of the following is taxable income? A. Child support. B. Alimony received, 2019 divorce. C. Gift. D. Life insurance proceeds. Correct answer. B. Alimony received from pre-2019 divorce decrees. Which of the following is not an allowable adjustment to income? A. Educator expenses. B. Traditional IRA contributions. C. Charitable donations. D. Student loan interest. Correct answer. C. Charitable donations are an itemized deduction, not. Which of the following statements about health savings accounts is true? A. Contributions are not deductible if made through payroll deduction. B. Taxpayers enrolled in any health plan can contribute to an HSA. C. Withdrawals for qualified medical expenses are tax-free. D. The account must be closed each year if unused. Correct answer. C. Withdrawals for qualified medical expenses are tax-free. Contributions to an HSA are tax-deductible, earnings grow tax-deferred, and qualified withdrawals are tax-free. The account rolls over year to year. Which of the following types of income qualifies as earned income for the Earned Income Credit, EIC? A. Unemployment compensation. B. Interest from savings. C. Self-employment income. D. Social Security benefits. Correct answer C. Self-employment income. Earned income includes wages, salaries, tips, and net self-employment earnings. Interest, dividends, unemployment, and Social Security are unearned income. Which statement regarding the Lifetime Learning Credit, LLC, is correct? A. It is limited to the first 4 years of post-secondary education. B. The maximum annual credit is $2,500 per eligible student. C. It covers tuition and required fees for any number of years of qualified education. D. It can be claimed only for students enrolled at least half-time. Correct answer C. The LLC can be claimed for any number of years, for qualified tuition and related expenses for eligible students enrolled in at least one course. Maximum credit equals 20% of up to $10,000 in expenses, max $2,000 per return. Which IRS publication provides general rules for individual income tax returns? A. Pub 463. B. Pub 17. C. Pub 334. D. Pub 970. Correct answer B. Pub 17. Publication 17 covers individual income tax rules. The others apply to travel, small business, and education. How long must a taxpayer keep tax records in most cases? A. 1 year. B. 3 years. C. 5 years. D. 10 years. Correct answer B. The standard record retention period is 3 years from the filing date or due date. What is the maximum deduction allowed for student loan interest? A. $1,000. B. $1,500. C. $2,000. D. $2,500. Correct answer D. Up to $2,500 of qualifying student loan interest may be deducted as an adjustment to income. Which of the following is an adjustment to income rather than an itemized deduction? A. Mortgage interest. B. State income tax. C. Traditional IRA contribution. D. Charitable donations. Correct answer C. Traditional IRA contributions are above-the-line deductions. The others are itemized. 9.5. A. 5%. B. 10%. Circa 15%. D. 20%. Correct answer B. Early IRA withdrawals are subject to a 10% penalty unless an exception applies. Self-employment tax is calculated on what percentage of net earnings? A. 92.35%. B. 100%. C. 85%. D. 50%. Correct answer A. Self-employment tax applies to 92.35% of net self-employment income. Which of the following education credits can be claimed for an unlimited number of years? A. American Opportunity Credit. B. Lifetime Learning Credit. C. Tuition and fees deduction. D. Hope Credit. Correct answer B. The Lifetime Learning Credit can be claimed for any number of years for post-secondary education. What is the maximum capital loss deduction allowed against ordinary income per year? A. $1,000. B. $1,500. C. $2,000. D. $3,000. Of net capital losses may offset ordinary income, or $1,500 if married filing separately. What is the maximum annual child tax credit per qualifying child under age 17 for 2025? A. $1,000. B. $1,400. C. $2,200. D. $2,500. Correct answer C. $2,200 per qualifying child, with up to $1,700 refundable. For 2025, what is the standard deduction for a single taxpayer age 66? A. $13,850. B. $17,750. C. $18,000. D. $27,700. Correct answer B. Single standard deduction is $15,750 plus an extra $2,000 for being age 65 or older. Which form authorizes a preparer to represent a taxpayer before the IRS? A. Form 1040. B. Form 2848. C. Form 8821. D. Form W4. Correct answer B. Form 2848 is the power of attorney that allows representation. Form 8821 only authorizes information access. Just a reminder, you don't have to be perfect, just consistent. Like the video, subscribe for more EA study sessions. Comment which topic you want next. Agape Academy.